Numbers coming up. Okay. Good evening, ladies and gentlemen. Thank you very much for joining us this evening on a lovely September Thursday evening. I would be very grateful, just while people are joining the webinar this evening, if anybody's logged on already, if you could just drop me a quick message in the chat. Thank you. Can you hear me okay, hopefully somebody can hear me. Yay, brilliant, marvellous. Thank you very much for that. So good evening, ladies and gentlemen. My name is William Tong. I'm one of the healthcare medical advisors here at Chase de Vere. I'm joined this evening by my colleague, Franco Venava, also a medical and healthcare advisor. As I say, we specialise in looking after doctors, dentists, anyone really involved in the medical profession. We're going to talk to you this evening about the NHS pension, and then hopefully there'll be some time for questions at the end. We'll give you a bit of run through. I'll let Franco get on with that in just a second, but we're going to give it a minute or so just to let people join us, because we've got quite a few registered this evening. If you have got questions on the chat, please feel free to post them on the chat. One of us will try and answer them as we go, or we'll try and pick them up at the end if we can't. If you've got anything that's sort of particularly personal to your circumstances, we may not be able to answer it this evening, but what we'll do, there is the opportunity to have a complimentary meeting with one of us or one of our colleagues. So please stay on the line, and there'll be a QR code at the end that you can click on, or a photograph, and that will give you the option of having a meeting, and we can dive into your circumstances on a more personal basis. So there we go. So that's the option there. Hopefully we'll cover quite a bit this evening. We might answer a few questions as we go, but I'm going to give it another 30 seconds or so, and then I think we'll get underway, just to make sure everyone's had a chance to get on. We'll turn our cameras off, so you won't be able to see us, but that way you'll be able to see the slides a bit better. So.
So I think we've got...
hand over to you, Franco. There we go. Sorry.
Yeah, sorry. Thank you, William. So I think we've got the majority of people join now. So like William said, my name's Franco or Francesco, whichever you find easiest to call me. I'm one of the financial advisors here at Chase de Vere. One of the, as William said, one of our medical specialists. Today we're going to be doing our presentation, Make the Most of Your NHS Pension, both now and in the future. So what we're going to do, we're going to talk through the various different areas of understanding that you should know about the NHS pension scheme. We'll talk you through, as has been a hot topic for probably at least 3 years, probably more than, the McLeod judgment and how that does affect you. We'll also talk about the various flexibilities surrounding your pension. So when we mean that, what we mean by that is when you can take your pension, how much your pension you can take, and also the terms around, maybe some partial or flexible retirement to allow you to maybe work slightly less whilst carry on working and taking your pension. I'll talk to you about the pension on the tax on pensions itself and the various different kind of arenas that you need to be aware of. Then we'll finally look at how to save for retirement in other ways. So not just your NHS pension, but your other ways. And then we'll go from there. I am seeing that. Oh, sorry. Can people hear me now? Sound is fine. Okay. Yeah. So, some people might be having some problems with sound. I think it might be the individual. So do check your settings on there. Then finally, we'll come out a bit onto, both myself and William and Chase de Vere as a whole, to kind of talk you through what areas that we can actually approach for you. So we'll start off with understanding your NHS pension and how this should work for you. You will be a part of at least two of these three schemes. So there are technically two schemes and three different sections of the scheme in total. There was the 1995-2008 section of the scheme, and then there is a 2015 NHS pension scheme. The 1995 scheme is, as you'd expect, if you'd have joined the NHS pension scheme before 2008. The 2008 section of the scheme is for people who have joined the NHS pension scheme between 2008 and 2015. And the 2015 NHS pension scheme, everyone will have some service in the NHS pension scheme now, as well. You will all be as part in the 2015 pension scheme as the as McLeod judgment has been affected. So, talk you through the differences in all three schemes. The 1995 section and 2008 section of the schemes are both what's called final salary schemes if you are an officer. And what that means is, if you know, they will take your all years that you've worked in the NHS, they will take your final salary. So if you worked 30 years within the NHS, they will divide that times your salary by 30, divided by 80, and that will give you the amount of pension that you will take, that you will be given at the end. You have a retirement age of 60, so that's a specific age of 60, and you will be given an automatic tax-free lump sum of 3 times what your pension is. Within the 2008 section of the scheme, you will have an accrual rate of 1/60th of your final salary per year early that you've worked there. However, you do have a slightly later retirement age, and you don't have an automatic lump sum. And finally, with the 2015 NHS pension scheme, it is what's called a career average or career average revalued earnings scheme, CARE scheme, which in essence means that you'll have a better accrual rate still, 1/54th of each year's salary that you have within the 2015 scheme. You get no automatic lump sum along with the 2008 scheme, and also your retirement age is in line with whatever your state pension is. You'll be able to work out and see what pension you accrued so far as part of your annual benefit statement, which is a part of your total reward statement. Now, you know, I know that, you know, sometimes people have trouble having updated total reward statements at the end of, obviously, each scheme year. So it's normally August, September that they do provide the updated total reward statements. Has everyone seen their latest total reward statement so far? Or kind of have you kind of, you know, gone on to the total reward statement website and downloaded it yet, or gone through the your ESR to look at it there? Because it's very important for you to be able to take this and, you know, really look into what pension you'll be getting at point of retirement. And as we know, the NHS pension scheme is very, very, very complex. So it is a case of, as well, ensuring that the NHS pension scheme, the NHS BSA, has got everything correct. And it's easier to correct things as you go, so year by year, rather than correcting things and all in one big chunk at the very end of your working time and when you want to take your pension. So how does the 1995 pension work, and how much pension will you get as a pension? So what they will do, they will use the best of your last 3 years working within the NHS to work out what your pensionable pay is. They will give you 1/80th per year's service that you have within the 1995 section of the scheme, and they will give you a pension of 3 times your lump sum. We're going to focus here a little bit on officers rather than practitioners because it is a little bit easier. But as you can see from this little table here, it is a per year that you would have working. If your final salary is £60,000, they will give you £750 per year that you've been working within the 1995 pension scheme. Looking at one of the messages that has just come in on the chat, yes, the GP's pension is a what's called a dynamised pension scheme. So in essence, it is a care scheme for GPs, for all 3 pensions, not just the 2015 scheme. And as you can see, if you have £6,000 final salary and 20 years service in the 1995 scheme, that will give you a pension of £15,000 a year and a tax-free lump sum of £45,000. What would happen, as quite rightly said, on the GP side of things, they will take your earnings per year that you've worked in the NHS, they will add them all together. Each year will be increased by inflation plus CPI plus 1.5%, and then they will multiply that total by 1.4%. For the 2008 section of the scheme, it works in exactly the same way. Average of the best 3 years from your last 10, 1/60th of your proportion of pay, and that will give you, as you can see, give you a slightly higher accrual rate, which is great, but also it does have a slightly higher normal pension age as well. As you can see there, and this is the same for all three schemes, you can give up some of your pension for a tax-free lump sum. So you can actually give up per £1 that you give up of pension, you garner £12 worth of tax-free lump sum. So let's say, for example, taking this 2008 section example here, if you gave up £5,000 a year of pension, so that would be, dropping you from £20,000 to £15,000 a year of pension, that would give you a tax-free lump sum of £60,000. As you can see, the normal pension age is higher, and we'll go from there. 2015 pension, as we've said, it is very much a career average revalued earnings scheme. So they'll take each year's pensionable pay and give you 1/54th of each year's pensionable pay towards you as a pension. However, they will also revalue that upwards in line with CPI plus 1.5% to ensure that whatever benefits you are building up now are still kind of present, correct, and true in real terms when it comes to your retirement age. As you can see at the bottom there, the normal pension age for this pension is whatever your state pension is. So for some people, that may be 65, that may be 66, that may be 67, or for someone like myself, I'm one of our younger advisors here, I'm 30, my state pension age will be 68. So if you're one of the younger members of the NHS pension scheme, your normal retirement age for this, the 2015 pension will be 68. When it comes to being a member itself, you are able to opt out if you'd like. Membership is not compulsory. You currently pay in, depending on how much you are earning within the NHS, between 5.2 and 12.5% as part of England and Wales, 5.2 and 12.7% as part of Northern Ireland, and finally between 5.7 and 12.7% in Scotland. As you can see, Scotland and Northern Ireland do things slightly different to England and Wales. Currently, the NHS contributes 23.7% to your pension scheme. As you can see at the bottom, slightly lower for Scotland and Northern Ireland. 9.4% is met centrally by NHS, the NHS kind of as a whole, and the remaining, whatever that is, sort of 14.3% is met by your individual trust. And 0.08% admin fee is charged in addition and is used to fund the running of the England and Wales scheme. The NHS pension scheme isn't just the pension. It is also, there are also family benefits associated with the NHS pension scheme as well. So obviously what happens to your pension? Should something, God forbid, happen to yourself before you obviously take it, or before you or after you pass away. So the remainder of that pension will normally be payable to your spouse or otherwise nominated qualifying partner or civil partner for the rest of their life. If you have any dependent children until the age of 23, your dependent children will also be in receipt of a percentage of that pension as well. If you have dependent children after the age of 23, so normally this would be if a child has either a physical or mental infirmity, which would mean that they would be reliant on you for the rest of their life, this dependent child would then likely expect to receive this pension for the rest of their life. There is also a lump sum that would be payable, and that would be, if it's a death during service. So if you're still working for the NHS, this would be roughly 2 times your annual pensionable pay. If you're not in service, this would be a 2.025 times the annual pension that you would have received had they retired on the date of death. Sorry, just a quick glass of water there. If you do leave the NHS pension scheme and you leave with less than 2 years service, you will receive a refund of your own personal contributions, less the tax that you would have paid, because obviously the NHS, the contributions for the NHS come out pre-tax. Therefore, if you receive that after, you will have to pay that tax. If you leave with more than 2 years service, your pension will stay in the scheme, inflation protected, up to whatever your retirement age is as part of that scheme. A question I've received a lot is what happens if I move abroad? If you move abroad, your pension will still be there. It will still be within the NHS pension scheme, and it will still be inflation protected. You can take this pension no matter what country you are living in at any time. From there, you would, when you come to retirement at your normal retirement age, you would do one of 2 things. You would firstly fill in the NHS pension request form. And number 2, you would fill in a form that would say, I'm living abroad. I don't want the HMRC to stop any tax. Therefore, you would then pay tax in whatever country you are living in at that moment in time. Very common question I've received a lot of over the past sort of 3 years I've been doing this for Chase Severe. If you would like, you are able to purchase additional pension within the NHS pension scheme. The minimum amount that you can purchase is £250, and you can purchase a maximum amount of £8,720 per year. Cost is obviously based on how old you are, how much you're buying, how long you're purchasing that benefit over, and whether you want to include dependent benefits or not. As you can see there, if you retire on ill health grounds within 1 year of the election to buy additional pension credits, you will receive a refund of contributions paid, and you will not be credited with any additional pension. If it's 1 year or more after the election, the full purchase becomes payable. Some of you may be a part of the 1995 pension scheme, and you may already be purchasing added years as part of the 1995 pension scheme. You can no longer purchase any added years. However, should you wish to do so, you can carry on paying those added years as you move through, and it's probably quite a good idea to do so. With the 2015 scheme, obviously your normal pension age is state pension age. However, if you'd like, you are able to purchase something called ERBO, Early Retirement Reduction Buyout. What in essence this means is you can purchase, keep it pure and simple, you can in essence purchase an extra 3 years of your NHS pension, 2015 pension, and you'll be able to take that 3 years before your state pension age. So if state pension age stays at 68 and you purchase ERBO within the 2015 scheme, you'll be able to take that pension at age 65 without reducing the amount of pension that you would receive. Obviously, for an application to apply from the date of joining, it must be received within 3 months of your joining date. And applications after that time would then be noted for the beginning of the next scheme year. In essence, meaning that if you have 5 years of service in the 2015 scheme and then decide you wanted to take out ERBO, only the years following would be subject to ERBO. The previous 5 years would not be subject to ERBO, so you would take that rest of that money at age whatever your state pension age is. Drawing your pension. So like we've said, the normal state pension age is 60 for the 1995 section, 65 for the 08 section, and between 65 and 68, depending on how old you are for the 2015 scheme. You can take early retirement for all of these pensions from age 55. However, if you aren't 55 before April 2028, the minimum pension age is increasing to 57, which will then mean that the early retirement age will increase to 57 as well. You are able to retire late should you so wish. However, with the 1995 section, the NHS will not give you any increases for retiring late, which means unless you're expecting quite a large increment between 60 and 62, let's say, there will be no net benefit to you for retiring late. However, the 08 and 15 section of the NHS pension scheme, then they will increase your pension for retiring late. Like we've said, you can either take your pension or you can reduce your pension by XYZ amount, and per pound that you reduce it with, you're able to take £12 worth of additional tax-free cash. Happens with all three of the sections of the scheme. They've used the same example in all three. Flexible retirement. There are some options for flexible retirement. Now, the most common flexible retirement options that have been factored in now is partial retirement, which is in essence that drawdown case on the end there, and that will probably be 95% of partial retirement cases, flexible retirement cases. In essence, what this means is you don't have to leave your trust. You don't have to retire and return, which means that you can continue working in the NHS, in the same trust, on the same contract. You don't need to negotiate a new contract, and at the same time, all you must do is reduce your pensionable pay by 10% in the 12 months following that partial retirement. Should you so wish, you can actually continue working the same amount and simply reduce your pensionable pay instead from the first 10 PAs down to the first 9 PAs. This will allow you to continue building up pension in the 2015 pension scheme. Like I've said, will be and is the most common way of retiring from partially retiring at least, or flexibly retiring from the NHS at this moment in time, purely because it seems a little bit more secure that the NHS, your trust, cannot decline you a partial retirement option, a drawdown option, and also you don't need to negotiate that new contract with the trust, so you don't lose any clinical excellence awards or anything like that, so that because there's no break in your service within the NHS. What happens if you're sick? The sick pay benefits that would be obviously applied as part of the NHS pension scheme is, in your first year's service, as you know, you'll get 1 month at full pay, 2 months at half pay, all the way up to after completing 5 years of service, you get 6 months at full pay and 6 months at half pay. You are offered, could be potentially offered, ill health retirement, should that be an option for you. I'll be honest, I've actually only met one person who has ever been offered Tier 2 ill health retirement, and that wasn't even through work, that was through my personal life. Tier 1 ill health retirement, if you are unable to do your current job due to permanent ill health, they will pay out your pension that you've already earned so far. So if your pension up until now is £15,000 a year, let's say, they will be paid out without reduction. Tier 2 ill health retirement, they will take whatever pension you've earned up until this point here. They will add a pro rata enhancement, which is in essence half of your prospective pension to your normal pension age, and then they will pay that out without reduction. And finally, if you are classified as terminally ill, they'll potentially pay your benefits out in a single lump sum. Would you qualify? Like I said, I haven't met many people who have qualified for ill health retirement, neither tier 1 nor tier 2. So it is very difficult to prove any illness is permanent. Obviously, if you do qualify for ill health retirement, that income there that they provide you may not actually be enough to continue living your life. And the reason why we bring this up now is we want you to ensure that your income protection is in place and up to date, should you have a need, to ensure that it does reflect your current circumstances. The McLeod remedy. In essence, to keep things simple surrounding the McLeod remedy, what happens is all years of service that you have between 2015 and 2022 has been rolled back into the old pension scheme that you were a part of, whether that be 95 or 2008. This has been automatically done, and it should have been reflected in your 2024 total reward statements. Now, hopefully, you have received your, at least your 2024 total reward statements. Also, the majority of you should have received your remedial pension savings statement. There should have been a little brown envelope that dropped on your doorstep from around October, November last year. I know there's been lots of delays surrounding the remedial pension savings statement. However, this is a very important document for you to be able to obviously be able to continue to ensure that everything is present and correct. If you haven't received a remedial pension savings statement, bug the NHS at least 3 times. And once you have bugged them 3 times over maybe a week and a half, submit a complaint to their complaints inbox, and they will be able to tell you exactly why you haven't received either a total reward statement nor a remedial pension savings statement. But like I said, in essence, keep things simple. 7 years of service has been rolled back into your old scheme. Should you wish to not take that remedial pension savings statement for a certain number of people, it will be it won't actually be the best route forward for them. Then, well, the NHS, you will be able to make that choice. That is called the deferred choice underpin, and you'll be able to make that choice of whether that will be the right thing for you to do or not. If you don't know if it will be or won't be the right thing for you to do, then you are able to contact myself or William or someone else as part of Chase Severe, and we'll be able to assist you making that decision. Pension taxation, and I have seen a few comments around this as well in the chat. So obviously your annual allowance from 2023 is £60,000. It's reduced for those with higher taxable incomes. If your taxable income is over £200,000 per annum, you will have a reduced annual allowance by way of £1 for every £2 your annual allowance, your annual income, including your pension contributions, is over £260,000. You are able to carry forward 3 years worth of unused annual allowance, and any additional tax, any annual allowance tax rather, that needs to be paid can be paid via either self-assessment or scheme pays. In essence, you take a reduction, slight reduction in your pension when you take your pension, and this scheme will pay that tax for you by way of reduction of your pension. Again, we're not going into a huge amount of depth. This is one of our slightly shorter presentations, and if you've got kind of specific questions surrounding anything that we've discussed today, or you've kind of got more specific questions surrounding your specific circumstances, please feel free to book an appointment with us at the end. There will be a little button that you'll be able to press at the end that you'll be able to book an appointment through to ensure that we can go through your situation fully in person or over Teams. So your retirement income may be available, maybe made of a number of different things. Number one, your NHS pension. Number 2, any added years or additional pension you purchase as a part of your NHS pension. Number 3, your state pension, which you'll get from between 65 or 68. 4, any private pensions that you may have. 5, any other savings, such as ISAs or other investments that you may have. And 6, any potential property income or even your personal property that you own may be offered for you as income. Working out what your income will be in retirement is, like it says there, like a jigsaw trying to put a picture together. And you may or may not be fully aware of all the different areas that you will have, and therefore it's really good to kind of sit together and get a full picture of what your retirement will actually look like, rather than just kind of letting it happen and going from there. Key takeaways from today that we'd like myself and William would like you to take away from today. Firstly, do you understand how your NHS pension is calculated and what pension you will expect? And make sure that, like we've said, if you haven't received an annual benefit statement or an updated annual benefit statement, please get on the phone to NHS Pensions, whether that be, England, Wales, Scotland or Northern Ireland, and please ensure that they actually tell you why they haven't provided you with an annual benefit statement. Normally, we find it more common with GPs that they haven't received an annual benefit statement. Main reason being you tend to sit about 18 months behind because you've got to go through PCSE before you go through NHS pensions. However, we want you to make sure that you are registered to receive an annual benefit statement because it's so important for you to be able to be aware of what your pension looks like. Obviously, taking a lump sum from your NHS pension rather than keeping it all as an income. The full set of benefits, including protection and spouse/partner benefits offered by your NHS pension, which is, should something happen to you, anything that will go from there. What happens if you go off sick, either temporarily or permanently, and do you have the appropriate protection in place for that NHS pension, for that circumstance that would happen there? Do you understand the options that are available to you should you wish to retire early or increase your NHS pension? And are you aware of the impact of the McLeod judgment on any annual allowance taxation liability? That hasn't really been brought up, and kind of just to give a bit of a summary and a bit of a point around that, the annual allowance taxation liability and the McLeod judgment, in 95%, 97% of the remedial pension statements that I've seen from clients of mine, and I'm sure William will say the same, is I've seen a reduction in their annual allowance contributions over the years that have been affected, purely because of the unique way the NHS pension scheme works. However, this isn't true of everyone, and it will definitely be a point of we need to make sure that everything is present and correct. Why use us? Hopefully we'll save time for you, because we do this every day, and you have families, you have difficult jobs, you have a lot of work to do. So hopefully we'll kind of save you time and reduce the noise around that, and we'll really make sure that you only get the information that you actually need, rather than lots of information that is just thrown at you. We hopefully will help to quantify your goals, so to ensure that we know exactly what you're looking to do and what you're looking to achieve. I like to think we're quite straight talking. I know William and myself, we're both very straight talking to each other. So we're very straight talking to our clients as well. It's a point of making sure that if you come to me and say, Franco, I've got not much in savings, but I want to retire next year, well, then that's kind of a point of, well, let's kind of maybe push that back a little bit and go from there. And finally, hopefully we've got some helpful tips and tricks to help you improve and manage your finances. Why use us as your financial advisor? We're bespoke. Everything that we do is independent, which means we aren't tied to any bank, an insurance company, or anything else like that, meaning that we truly find the best possible solution for you. We're specialists. 95% of my time is taken up with speaking to clients such as yourselves. Hopefully we're very comprehensive. We cover all areas of financial advice, whether that be investment planning, wealth preservation, or insurance protection, and providing for retirement and inheritance tax planning as well. Over 14,000 of your colleagues in the NHS have entrusted their personal finances to our advice. That's not including any other clients that we have outside of our medical side of things. And finally, we don't like to blow our own trumpet too often, but at the same time, we are often recognised by fellow professionals and independent judges for unparalleled standards. So, should you so wish, I am putting in a little request appointment button in now. So, should you wish to book a complimentary meeting, you can book one of 3, half an hour, 60 minutes, 90 minutes. And what will happen is, you will sit down and we will talk about what your situation currently looks like, what help you actually do need, and kind of what the relative costs and charges associated with any advice that we would give there. Because every single person is unique, because every single financial plan is individual, I can't say to you with certainty, this is how much this will cost today, because it's very different. Every person needs very different advice. Therefore, we're very transparent. We'll go through exactly what help you may need and exactly what that cost would be from there. And that basically comes to the end of the majority of our presentation. The request appointment is just there. I think William has popped up a couple of questions for me. However, I know he's been very, very, very good.
Thank you, Franco. Yeah, I've been trying to answer them as we go along. I may have missed one or two. I do apologise if I have not managed to pick up your questions you've gone through there. But please do. There's a couple of people have mentioned that they're retiring at the end of the year. This is a really good time to just come and kick the tires and have a chat and just talk through your plans, because I know lots of people are concerned about what might be in the budget in November, on November the 26th. It is very close to Christmas. There's not going to be a lot of time for people to digest that information before going away for Christmas. So just, if it would help, we're very, very happy. That's what the complimentary meeting is for. We can dive into much more detail, and we can sort of get into the nitty gritty around your particular scenarios and your concerns in that meeting. So please do feel free to make use of that. We really enjoy actually getting under into the detail of things and helping people. So there's Franco, there was one, it's come up a couple of times, just we didn't talk about it very much. It was just around the added years and additional pensions. Yes. Would you mind just spending a little bit more?
Yes.
Thank you.
So with the ignoring the additional pension side of things for now, and I'll come on to that in just a moment, with the added year side of things, as part of the 1995 scheme, should you so wish, you were able to purchase, in essence, added years within the 1995 scheme. You're no longer able to take out new added years contracts. However, from kind of, provided you did it early enough, you were able to take out an added year contract, which in essence meant that, let's say you had 30 years worth of service in the NHS pension scheme, you could have purchased maybe an additional 5 years worth of service in the NHS pension scheme, in essence giving you 35 years of service with only 30 years that you would have actually done. And this would, in essence, given you additional pension once you end up retiring. Added additional pension. So, like I said, by the way, added years no longer available to new contracts. Additional pension, however, is very much an area that you can still approach. Yes, there are certain inflexibilities applied to the NHS pension scheme. For example, you can only take it at a certain point, and it is a defined kind of benefit. There's no flexibility how much you can take, etc. However, you are able to purchase, in essence, a contract that will give you an additional £2,000 a year, let's say, at your normal retirement date, should you decide to do so at whatever time in your life that you are within the NHS.
Frankie, thank you very much. Sorry, I was
No, it's absolutely
realised
fine.
and answering another question. A couple of people have asked what our service costs, and the answer is it depends entirely on your personal circumstances and what you need our advice on. For instance, if you're looking at investments, we would charge fees for that, and what the fees would be would depend on how much and what we were doing in terms and the complexity of it. If we were also helping you with something like protecting your income, which we do for a lot of doctors, that you wouldn't necessarily pay us. We would be paid by commission from the product provider. But again, we wouldn't go ahead with the advice without having made a recommendation and talked you through, and you'd be aware of exactly what was being paid by that product provider before you went ahead with it. So we're always, as Frankie said, we're always very transparent about our fees, and so you're always in control. And it's not like a sort of using a solicitor necessarily, where you might sort of speak to us on the phone and then we would send you an invoice for the time we'd spent. We sort of generally, meetings we don't charge for meetings. We charge when we give advice, but I'm sure Frankie is exactly like me. I always try and do the absolute maximum I possibly can for people before I have to charge you a fee. Sometimes I've had more than one meeting. I've had a number of meetings before we've got to a point where you've actually needed to take the advice. But we're clear by then, and we've built up a really good understanding. The point of that complimentary meeting is just to give us and you a chance to get to know us, and us a chance to fully understand your circumstances. And what we find quite often is that you haven't got all the information. You might be missing that TRS, or you might be missing that RPSS, or you might be missing the annual benefit statement, or there's other bits and pieces that we need to pull together before we can formulate the advice. So we don't sort of constrain it just saying, oh, we've had that one quick chat, no, we can't talk to you anymore without a fee. You're always very welcome to come back, and we'll pull that all together, work with you to decide what advice it is that you really need, and then we'll explain how and what that advice would look like and cost. And then you're in control. You can decide at that point whether you want to go ahead with it or not. So you're not sort of obligated in that way, but always very happy to talk to that. And I say it is always built around your personal needs and your circumstances. So it's always personal to you. I'm trying to look back through the questions. There's been some really great questions, so thank you very much for all those. It's always really good fun to have really good questions, because it keeps us on our toes, but it also just shows that what we're saying is really connecting with people. One of the questions that came up is, if you leave within 2 years, can you rejoin the scheme? Yes, you can absolutely rejoin the scheme. Frankie, there was one about death. There's been a couple of questions actually about death in service.
Yes.
Do you want to just spend a little moment talking about that? If someone, and particularly a couple of people asked about what their spouse would get if they were to die while in service.
Yeah, so it does depend on whether you are obviously a current member or a deferred member of the NHS pension scheme. But when we look at what the survivor pension of that would be, it is simply a case of if you're a widower or a widow, civil partner or nominated partner of someone who's working within the NHS, it would in essence be 50% of your, it's 50%, isn't it, William?
It is, yes.
Yeah, so 50% of the pension that you have accrued up until that point there, and that will be payable for the rest of that person's life, so in essence, the rest of your remaining partner's life. Like we've said, there is kind of a limit on how much is paid to dependents. So there is a limit on how much is paid to dependents, and that will be up until the age of 23, unless they have a mental or physical infirmity, and they would then receive that pension for the rest of their life as well.
Super, Frankie, thank you. There's been some brilliant questions coming in. There was one about can we help with IHT planning and drawing up trusts?
Yes, absolutely can.
Absolutely. Yeah, we can actually. We do a lot of this, and in fact, we've been seeing a big uptick in sort of interest around that, particularly since the announcement last October, the budget. We've talked about it in years. We talked about costs. Somebody said, could we explain McLeod? I probably the simplest explanation we could give you with the McLeod remedy. Any service that was in the 2015 scheme has been moved back. So the 2015 to 2022, there were 7 years. They have been moved back into the old scheme, into the 1995 scheme, and you will have the option to take the benefits either at age 60 under the 95 scheme, or move them back again into the 2015 scheme and take them at age 67 or 68. If you were affected by that, do come and have a chat with one of us, because it is not a straightforward thing to say the old scheme's better, the new scheme's not as good. It really does. Which one's most efficient will depend very much around a number of other factors that are too complicated to go into on a webinar. So if that's something that affects you, please come and have a chat. We're very happy to talk through that. But it's so complicated to get into. It's really difficult on a webinar to cover it properly.
Absolutely. There is a question here as well. If you book a meeting, will it be completely free and with one of us too? Firstly, that, like we said, that meeting is in essence held at our cost. You will have that meeting complete complimentary, because it is all about finding out as much as we can about you. And I believe you should be able to book an appointment specifically with one of us too, should you so wish, if we've kind of given you some good information today. And if not, you should be able to kind of make a request that it be with maybe a specific advisor. I know we've just introduced a new booking system which allows you to book directly into someone's diary. I've seen a little bit of success with that, but it's more of a case of you should be able to, should you so wish, make that request when any notes are made.
Yeah, by all means, yeah, please, if you'd like to have a chat with one of either Franco or myself, yeah, please do mention that when you book the meeting. Equally, some people might prefer to talk to a lady advisor. We do have a number of very well qualified lady advisors, so if that was a preference, that's equally possible to facilitate. Yeah, I mean, if somebody asked about email addresses, please just click that appointment button. That will get you there as well. Just looking back through, hopefully we've covered up most of these. Okay, yeah, so it's cost. We did cover added years. That's great. There was a question about calculating the career average salary. We spend quite a lot of time on that, can't we? But it's very tricky, because obviously you don't know what you're going to earn exactly in the future. If you just wanted a sort of rough rule of thumb, you could say, okay, how many years have I got between now and retirement? So age 67 or 68 for the 2015 scheme. You could then say, okay, if my salary is that, I've got 20 years to go. So my salary times 20, and then it is 1/54 of your salary for each year that you're in the scheme. Okay, so perhaps the way to think about it is each year you're in, so you say you've got 20 years to go, you would have one little pot for each of those years. Now it is revalued, as Franco mentioned, with CPI plus, so there is a little bit more to do. But if that's something we can dive into that in a bit more detail as well. But it, again, depends around your circumstances. So
absolutely.
Let's have a look through. There are the remedial pension statements there are a number of people, I do get this, I know Franco does as well, that have been delayed, and it's a real pickle. So they have now, they are still working through them, they are sending them out still. There has been, if you've had an election for scheme pays because of this, there are some options around that, but again, starts to get very complicated, and rather than confuse anyone, very welcome to come and have a chat with us, and we can talk through how you might be affected in more detail. There we go. I think just check that somebody else, is it advisable to purchase? I think that's it. Is it advisable to purchase some years? I think is it worth buying extra pension? It does depend. There is, as Franco mentioned earlier on, there is the annual allowance of £60,000. If you exceed pension contributions and pension growth of £60,000, so remember, when you're thinking about this, it's your your contributions, your employer's contributions, plus also the growth in whichever scheme you're in, will contribute to that allowance of £60,000. So there's quite a few bits to think about there. If you go over that, then you're going to end up having some of the tax relief that you've had clawed back. So that's where you get this charge for basically, as before, when the threshold was lower at £40,000, lots of people were felt they were being penalised for working more because you were getting a tax charge because you weren't in control about how much went in. We do have things called headroom checks, which we can help with, that basically just gives you a clear picture of how much carry forward you've got from previous years to offset against making extra pension contributions. So again, unfortunately, it's not something that's really straightforward, but there are tools that we can help with, and we can get into that and build that picture with you and give you a bit of clarity for 2 or 3 years ahead, and come up with a plan. We do get lots of queries about tax-free childcare and making contributions to get you back under the threshold. And again, if that's something that you're looking at, you can choose to do. You could do extra pension into the NHS pension, or we do see lots of people using private pensions, so self-invested personal pensions, particularly because it gives you the flexibility around when you want to take benefits. You're not tied then to the state pension age of 67 or 68 as you would be if you do extra pension into the NHS scheme. So yeah, so there's a good question there about Northern Ireland. If you've worked in different parts of the UK, it is worth checking. This is something we do see occasionally, that the trusts don't all talk to each other. So it is well worth checking that it has been brought across. But again, if you get stuck there, you can always reach out, and we can try and help you that, and certainly get points of people to talk to. Oh gosh, there's loads. It's good. Thank you so much, everyone, for these
questions have been brilliant. Yeah,
it's really brilliant to would it be better to get the remedial statement before booking a complimentary appointment? No, you don't have to. You don't have to wait for the RPSS. You can always book the complimentary appointment if it's a critical to the meeting, then we can always book in another one with you, when we think we've got it, or there may well be stuff that's pertinent to talk through. So yes, so don't necessarily delay just waiting for the RPSS, because we don't know when, sadly, the NHS are going to manage to get them all out. But there we go. There we go. Qualified for retirement.
I think we are probably pretty much there with that, William.
I think you answered that one, Frankie. Sorry, I was just reading it and I realised you answered it. So.
Yeah, I did answer that one, and I'm aware as well that we have thrown a lot of information at all these people this evening. So, like we've said, on behalf of both of us, thank you for joining us tonight.
Thank you very much.
And hopefully, hopefully we'll see you sometime soon, and we'll go from there.
Yeah. Thank you very much, everyone, for joining us this evening, and some really tremendous questions. Thank you very much, and I hope you all have a good evening.
You will receive a copy of this presentation. I think it's within 24 hours of this going out, so fantastic.
All right. Thank you, everyone. Have a good evening. Good night.